In this part of the program, we review measures to build confidence and liquidity into the Nigerian Stock Exchange, and we also take a look at gut ecology for today's business executives. Merchandise trade for the first quarter of this year decreased by 22.4%. This change is attributed to a 30.3% decline in export value over the previous quarter. We took a look at Nigeria's first quarter foreign trade statistics with Yemi Kale, Statistician General at the National Bureau of Statistics.
The decline in trade in the first quarter of 2012 was largely as a result of a decline in imports on a year-on-year. And that's what pushed down our total trade in 2012 first quarter.
But the good highlight here is the balance of trade year-on-year picked up quite significantly. This is good for several reasons.
Yes, obviously it means that the ability of the central bank to keep our exchange rate stable becomes easier. And like I said, this was largely as a result of a drop in imports on a year-on-year basis. And that's where our balance of trade had improved significantly in the first quarter.
Something that is indicative of a development all across Africa is China is the country where most of Nigeria's imports are now coming from.
Yes, that's correct. We have noticed a pattern where most of our imports are now shifted. In the past, most of our imports were coming from the United States and several countries within the European Union. But consistently, China has now become the major destination of our imports. And I guess that is not too surprising.
That said, the UK and the US are not too far apart from the other main source countries. Does that mean that Nigeria is still exposed to a certain level to the contagion from the global economy and whatever misfortunes there may be there?
Obviously, our major trading partners, whether in imports and exports, have always been the United States, China now, recently, and then a few countries in Western Europe. That is still the case, but what we have noticed on exports in particular is that in the first quarter in 2012, the value of exports actually to these countries actually are reducing. So we're having a more diversified source of for our exports. So you will find that overall our exports are growing, but we're having increases in exports to China, to India, even to other African countries. So it's no longer concentrated between the United States and Western Europe as it used to be in the past.
At the recent AFDB meeting in Tanzania, Nigerian Finance Minister mentioned the federal government is working on a forbearance package for stockbrokers as part of measures to stimulate confidence and liquidity in the Nigerian stock market. Mike Itekboje from the Chartered Institute of Stockbrokers spoke to Uche Okuronko in Lagos and explains the efficacy of the move.
The forbearance the stockbrokers asked for was sometime last year, and it has to do with the margin loans which they took from banks. And since the banks have taken the underlying assets, the securities that we're using, securing those loans, it is fair and proper for them to be forgiven of the loans. That is a completely different issue from what we are talking about when we talk about the stabilization fund. The stabilization fund is for the entire market, in which case we are saying, look, for the past 4 years, the market has lost much of its value. We've lost over almost 10 trillion naira now, because if you add the fact that Dangote Cement added 2 trillion after that, and some other listings that have been done, the market has really lost value and it's continuing to lose value. Therefore, there's no liquidity and there's no confidence. And we believe that if there's a stabilization fund, which is not new to the world, because other jurisdictions have done it to stabilize their market and to stem the drainage. It's like we're having a situation where a patient is bleeding. The first thing we want is stop that bleeding. And that stopping the bleeding is what we are asking for with the stabilization fund. We believe that some money in the neighborhood of 400 to 500 billion would do it. In fact, it's going to be such that we may not even spend all that before the market recovers. And so to that extent, we are saying a stabilization fund is what is needed at this critical time if this market must move forward. It was done in the US and in different dimensions, directly and indirectly. The government intervened and the US market recovered.
Now, you did say that you want this fund to sort of kickstart activities in the market, restore investor confidence. But isn't that what the market makers are for? I mean, barely 2 months ago, we saw the market makers, 10 market makers, being chosen by the stock exchange. And their role is to bring back liquidity into the market.
Yeah, first, there are 10, that's good enough. But the question is, do they have the financial capacity to bring out the market? As of today, the money required for that, I'm not sure the 10 of them can pull that stuff. But it's also a good development that they are there because the government can choose some of them to be the instruments for managing the assets that will be mopped up from the market. And then they can be the people or the instruments or purpose vehicle to be used to direct the funds. So to that extent, they are very useful, but as of now, I'm not sure they have even really started work.
Mergers and acquisitions will likely continue to feature prominently in Nigeria's insurance industry over the next 2 years. This according to an article by Standard & Poor's Rating Services. Matthew Prini, Associate Director at Standard & Poor's, explained.
Well, there's two trends happening really, a long-term trend and a short-term trend. Basically, 61 insurers where in a market where gross written premiums is only 0.75% of GDP, so about $2 billion is a lot of insurers, and there's constraints at that socio-economic level where fundamentally you've got to change a culture in order to increase retail insurance, and you've got to really segment and go strongly into the corporate market. That's the long-term trend. In the short term, regulation is increasing, and NICOM are definitely improving their regulatory capabilities. We're seeing a move to allow, or actually to enforce, international financial reporting standards and risk-based supervision. And those two factors alone will mean that, A, you'll need a lot more skills in-house in order to deal with that, whether it be from a financial accounting point of view or from an actuarial point of view, or you outsource those skills somewhere, which will increase costs, etc., etc.
Some might argue this thing about having a lot of insurance companies with very little penetration, for that matter, is an African problem. Many other African countries have the same. You have over 50 insurance companies, but penetration remains sometimes even below 2%. Mm-hmm.
Absolutely. It's a problem across Africa, but it's also an opportunity, I guess, for mergers and consolidation. We will see insurance growth grow, definitely. It's about changing the culture, and it's about financial intermediation deepening, but it will happen. It's just in the early days.
The financial complexity involved in consolidation might also present some certain problems. For instance, there's significant adjustments that balance sheets might need to go through in Nigeria.
Yes, I mean, there's a potential for that because once you change from one reporting standard to another reporting standard, once you go from a consolidation where you have your own platforms and change to another platform, or so merge in another platform, then there's often gaps within the system. And in the report we highlight that potentially there's different ways of valuing certain assets which may cause a gap in some of the accounts.
Why is it that you believe premium growth will likely outpace GDP growth over the long term?
It's fundamentals, to be honest, just where insurance premium is at the moment. We see there's a pent-up demand for that product, and we see that GDP growth won't be anywhere near the growth of GWP.
Give us a sense of the size of premiums right now in the industry in Nigeria.
It's about $2 billion, I think, just less. And we think it will probably grow at about 20 to 25% a year over the next 3 to 4 years. If you compare that to GDP growth of around 6 to 8%, you can obviously see the gap.
Stress has been shown to be related to individual and organizational inefficiencies. Its relationship to job performance has recently received increased attention. Professor Patrick Boyk from the University of Stellenbosch and Senex Life Sciences explained the impact of stress on our immune system.
Stress is normal. I mean, you know, we have these organs that are secreting certain stress hormones every time we are, in fact, you know, facing a stressor in life. It's the way that we process that. It's the way that we actually say, okay, I have a challenge, I have a deadline to meet today, let me focus and I will reach that deadline and be able to deliver. But tomorrow there are new challenges coming, and what we're not doing is how do we de-stress? How do we take time out for our adrenal glands to reset themselves overnight so that we can actually face that stressor and do a proper job the next day? So it's all linked to lifestyle. We're not eating properly, so nutritionally we are becoming inefficient. We're not, obviously we don't have, the stress impacts on the way that the gut bacteria in our gut process our food, so we're not absorbing. So it's a multitude of factors all relating to the actual stressors.
And what was so interesting is you were talking about how this impacts our immune system and that we're getting all these chronic diseases that are not hereditary at all. They're self-inflicted because we're not living right.
Lifestyle, disease of lifestyle.
So let's talk a little bit about hypertension, high blood pressure. I was talking to you about that.
Sure.
And especially in the workplace, you do find it. You're finding people younger and younger getting it. You find people in the early 20s have got high blood pressure at levels that you would not be expecting at somebody of that age. So what is happening? Because we do know about this. We do know about eating healthy. We do know about exercising.
Basically, it comes back down again to the way that the adrenals function. Adrenals are two small organs that sit just above your kidneys, and they secrete this very important stress hormone called cortisol. As we become stressed, so the cortisol level increases. So the adrenals adapt and they secrete more and more. But like any organ, they can only secrete a certain amount. So after a while, they become what we call fatigued. There's not enough cortisol being secreted. Now, the first signs that people start complaining of joint pains, muscle aches and pains, that is when you know that there's not enough of this natural glucocorticoid, natural anti-inflammatory being secreted by the body. If it continues, they crash. And when that happens is when the blood pressure starts climbing, because cortisol is controlled by the secretion of another hormone, and the other hormone is in fact pushes up the BP.
What is important though? Is it reversible?
It's reversible, totally. Good nutrition, look at the gut, supplement if need be, give the immune support. And my most important thing is create your space. I think we have lost the ability to take time out for ourselves and say, let me recharge my batteries. I need 10, 15 minutes. Be it exercise is important, but you also need to just, take your mind, change the scenery. I always tell patients, do yoga, do some meditation, pick up a book and read a good book.
But people, this is what people are saying.
Well, that's all for this edition of Africa This Week.